Good afternoon, everyone. In today's video, we're going to take a look at some of the trades that set up via our stock Volatility Box Live Scanner. The Live Scanner is a machine that we've built which constantly keeps giving you new trade ideas as they set up, and it usually refreshes right around every 15 seconds or so with any new trade ideas. Now, there's two simple rules that we're going to use for today's recap. The first is the trades must have triggered between 6:30 to 10 a.m. Pacific. This is when they must have appeared on our live scanner, meaning they've actually opened. They could have closed after the 10 a.m. Pacific time frame, but we are only looking at trades that open between this range, so the first few hours of the market being open, which gives you the ability to really just have enough time for follow through. Now, the second criteria here on this results is they must have been on the live scanner for 3+ minutes, and that way we're able to filter out any touch and goes in which you really wouldn't have had an opportunity to actually participate in that trade for any time where we just hit our volatility box entry line and then simply bounce from there, or even the opposite, which is go straight to our stop, right? So it needs to have been on our live scanner for at least 3+ minutes, really giving it time to consolidate just a little bit. Now, using those two filters, here are the results that we had for today. We had 19 total trades, 8 of which were long opportunities, and then 11 were short. Out of our 8 long opportunities, 5 were via our aggressive volatility box model, so 5 aggressive longs for a net winning percentage rate of 80+%, and a net P&L of positive 195. As long as this number is above 0, that's what we like to see, which we saw really across the board today, even where we had a net winning percentage, which was less than 50. So we'll talk about that in just a second. Now, via the conservative long, we had 3 trades that set up. Out of those 3, 2 of those 3 were winners for a net P&L of positive 23 cents. And then finally, we had 11 aggressive short setup. We'll talk about some very specific opportunities here in just a second. But of those 11, we only had a winning percentage rate of positive 45.45%, but still a positive net P&L rate of positive 177. So that's something we don't see too often, but that was nice to see. Now, if we dive into the next slide here, this is a list of all 19 trades that actually set up for today. Anything highlighted are the ones that we're going to take a look at in this video. So ADM, SunPower, GSX, then Nautilus, which I know is on a lot of folks' radars and even in people's portfolio. And so here, I'll talk about how you can use your portfolio stocks along with the volatility box to try and manage some of these stocks in your portfolio and hedge them a little bit better. And so Nautilus here was an opportunity to sell a call. I'll talk about the P&L there in just a second as well. Then we had Halliburton and then American Eagle Outfitters. So we'll take a look at 1, 2, 3, 4, 5, 6 trades for today. And so let's start by first generating the volatility box for all 19 of these stocks. So to generate the volatility box file for each of these, we can come into our stock volatility box platform, click the indicator page, which then allows us to get thinkorswim files. And then here we can paste in the symbols that we care to look at. So we said we wanted to take a look at ADM, SunPower, GSX, NLS, Halliburton, and then American Eagle Outfitters. Then we can click generate indicator here. And then if we click aggressive, that'll download the aggressive volatility box for anything aggressive long, aggressive short. And then we can also download the conservative study. And now both of these can be directly imported into thinkorswim. Now I've already imported them into thinkorswim, so let's actually go through some of these results. We'll start with ADM first. And before we talk about what actually happened, let's go through the setup real quick. The setup is if price action breaches either side's volatility box clouds, that's the beginning of the clouds right here, so either this line or this line, which is also seen on our dashboard, which I'll show you in just a second. But if we breach either side's volatility box clouds, then once we do that, it appears on our live scanner. Once it appears on our live scanner, we're looking for an edge signal confirmation, so a red arrow for any bearish setups or a green arrow for any bullish setups. And as soon as we get that, it's nothing more than an overbought, oversold indicator that we've built. Once we get that, the trade is a go as long as you have an entry better than the clouds. Our stop is outside of the volatility box here, and our target is this gray target line right here. Now, if you want these levels in a much quicker format, you can also use our dashboard that we've built. So for example, if we took the same tickers that we just typed in there, so we had ADM, SunPower, GSX, NLS, Halliburton, and American Eagle Outfitters, we click add to dashboard, we have the same exact levels, which if we open up all of the pricing here, you'll see we have our long entry, our long stop, our long target, all across the board using our volatility box levels. And if you want the conservative levels, all you need to do is click this toggle switch. So that gives you an idea of how to use not only the dashboard page, but also the indicator generator. Now coming back in, we know the setup. Let's go through what actually happened. Now with Archer Daniels, we had price action breach our volatility box clouds right here. Once we had that happen, it appeared on the live scanner. After that point, we're looking for an edge signal. We had multiple right here. Once we did have the edge signal, that's when the trade is a go. And unfortunately, we ended up going outside of our clouds right here, which is where he got stopped out. Now, for those of you that trade options, again, I've talked about this, but for those that trade options, you may have been spared in this price action as opposed to having a hard stop here, where giving it a little bit extra room here, essentially going even outside of the conservative volatility box, doesn't really take that much away in terms of the option pricing and the potential losses that you'd have to have. However, on a pure volatility box trade basis, this trade was a loser when we went outside of the clouds right here. We then had price action bounce into our long volatility box clouds right here. This was after that 10 a.m. cutoff, so it's not on the list of trades that we used as a recap. But to point out here, we had price action breach our volatility box clouds, this time for a long entry. You had multiple edge signals along with an opportunity to enter the clouds or better. And you'll notice how after we got the edge signals, we chopped around here sideways for a bit, and then we went on and we hit our target. So that's how both a long and a short look like in ADM. Now, if we keep coming down the line here, the next one we said we'd take a look at was SunPower. By now, you should be a little bit more familiar with the setup. So we had SunPower breach our volatility box clouds right here. We had multiple oversold signals. That's when the trade was a go, had an opportunity to enter at the clouds or better. And again, in SunPower, ended up going outside of the clouds just for a little bit, very similar to ADM before we had price action reverse. And then into the close, really, the final few minutes, we breached our long volatility box clouds, which now really makes us a likely trending candidate for tomorrow in the bearish direction. So that's SunPower, still a loss as well. Now, if we switch gears, I want to focus a little bit more on NLS here, because I know NLS is a stock that's on a lot of folks' radars. It may even be in your portfolio from recommendations from other folks. It's been one that's really been on a tear. Now, NLS today in the morning started off really just running right out of the gate. Now, the question starts to become, well, when is price action going to stop in NLS? So if you already have some stocks, when should you start to either trim down your position, maybe look at potential hedges, really get an idea of where you expect NLS to start to pivot and reverse in terms of price action. Now, we had NLS hit our live scanner when we breached our volatility box entry lines right here, and you had multiple edge signals. Now, my choice here, as opposed to selling the actual shares, was to hedge my existing position by selling a call against it. At this point, price action is right around 25.70. If you come into our trade tab here for NLS, you'll notice that everything in terms of strikes skips into $5 increments. And so 25 was an at the money strike, and 30 was the one that was out of the money, where selling calls on 30 made a little bit more sense to me, just in terms of capturing a little bit more in terms of that covered call position. Now, this call at that moment when we breached the volatility box was trading for somewhere right around $1.80. A little bit more if you could have gotten that, but $1.80 was a safe conservative fill. And you can see that by the end of the day, that $1.80 got trimmed down to $1.30 by $1.45. So that's one way in which you could hedge your actual position. Another, which is a more straightforward way, is to actually sell some of your shares once you breach the first zone, which is a target line, and this is only if you actually own the shares already. Then the second zone, the clouds, which is where you normally be looking at a stop. And then if you had essentially more and more positions that you were looking to trim down, then you have even the conservative volatility box target lines along with our conservative volatility box entry line. So that's a few different ways in which you can hedge your position. Another way that you could have also participated in this trade was by using the actual puts. Now, that's not something I did, but if we come in here and we take a look to see what that 25 put, so at this point, we're at 25, so the out of the money for the 25s, if we come in, is the 22.5. We come in, we take a look at what the actual 22.5s were trading at. Not really all that liquid in terms of the ability to really scale in and out, but if we come in, NLS, the trade triggered at right around 9 o'clock. We paste back in that put. You'll see right around 9 o'clock, that put is trading for really the closest amount you can say is $1.95. And then towards the end of the day here, if we come in and we take a look to see what that's currently worth, that's right around 215 to 250. And so that's yet another way in which you could participate if you didn't want to short the actual shares outright. But now NLS here should give you an idea of what a successful trade looks like and how you can either use the volatility box to hedge your existing portfolio stocks, really just using the live scanner as an alert system to know, hey, is any stock that I own running? And if so, should I be looking at trying to trim down my position, or at least use this opportunity to try and capture some additional profits on your shares? Or if you wanted to look at this as an actual new trade, if you didn't have any positions on in NLS, then this is where we had price action breach our volatility box line, multiple edge signals, opportunity to enter the cloud or better, stop is outside of the volatility box, and our target was hit. Then you had the stop move to break even, and then really after that point, NLS just continued to run very close to the other side's target line. So NLS was really, I think, the best trade of the day. Now moving down the line, we also said we take a look at GSX. GSX is a different example where we had both the aggressive and the conservative trades trigger, both of which were winners. And so to walk you through GSX's performance here, we had price action breach our volatility box clouds. We then got the edge signal, but we never had an opportunity to enter at the clouds or better before we went and we hit the target. So this first trade was one in which we were just on the sidelines still waiting for an entry. Now we have a retest here. Price action continues to chop inside of our clouds and then goes and touches our conservative volatility box. Now, the conservative volatility box is where you actually had an opportunity to enter, where price action breached our volatility box. So at this point right here, GSX hits our live scanner. We then have our edge signal. And then after you have the edge signal, we had an opportunity to enter at our clouds or better in this retest before we had actually hit our target line. So once we had the retest, we made just a little bit lower of a low, had to deal with a little bit of heat right here, but this fill is where the trade was valid and a go. And then you take a look to see what GSX did from that point. We hit our target, then we went on to really breach the other side's volatility box stop, right? This is the aggressive volatility box stop, the outer edge of the clouds. And so far, it looks like we may continue to see price action move up in the positive direction into tomorrow. So that's GSX. And then finally, we'll go through Halliburton and American Eagle a little bit quicker here now that you have a good hang of the setup. So Halliburton here, we had price action breach our volatility box clouds right here. So if I zoom in, this is the first time we actually had the breach. We had the breach. We got our bearish edge signal. Never got an opportunity to re-enter at the clouds or better, but you got close. But to point out really what Halliburton looked like in terms of a really great reversal point from our actual clouds. Something that's interesting here is this is very close to a triple top, right? You have one, you have two, and then once we breached our volatility box edge, this was the third top. And then finally, to conclude this video, we'll take a look at American Eagle Outfitters here, where American Eagle, again, we had a long opportunity. We had price action breach our clouds. You had the edge signal. You had an opportunity to enter at the clouds or better. We hit our target right away. Then the stop is moved to break even, really giving you a free trade, which was then taken out into the final close of the day. You didn't really see any kind of crazy run in American Eagle Outfitters like you did in Neutralis or Halliburton, but it was still a very interesting trade nonetheless in the sense of we had really just very little heat on this trade that you had to endure. You had an opportunity to take your profits off almost right off the bat, and then it's just a free trade in which you get to see, do we hit the other side's target line, yes or no? Do we continue to make a move up in the positive direction, yes or no? All right, so hopefully today's trade recap gives you an idea of a few different types of trades, both winners and losers, how to hedge existing stocks in your portfolio, along with just how to open new positions using a very simple setup in which the machine does most of the work for you, and all you need to do is pick and choose from the live scanner based on stocks that you'd like to trade, whether it's based off of liquidity, based off of if they're optionable or not, things of that sort. All right, hope this video helps. Take care, everyone. Good luck trading, and we'll see you in the next update.